Waste Management just reported their Q1 earnings yesterday. Their non-GAAP EPS was reported as a beat by 8 cents or 5%, reported at $1.67. Their revenue though was a miss by $90 million, but still up by 16.50% year over year. Now, into the future, in Q2, the revenue is expected to increase to $6.40 billion and the EPS is expected to increase to $1.90, which is quite higher than the current EPS of $1.67. Now, this doesn't necessarily mean that you should start buying the company right now, because it is possible that they are trading overvalued. Now, to figure this out, we will have to calculate their intrinsic value, and to do this, we will jump to my stock valuation spreadsheet, where I will plug in the company's ticker symbol, WM, and all the metrics will show up automatically. And as always, if you want to download these spreadsheets for your own personal use, you can do so at the link in the description. So moving to our first valuation model, the Grams formula, we will calculate the intrinsic value based on the future earnings per share growth of Waste Management. Now, to figure out the future earnings per share growth with the highest accuracy, we can have a look at the historical earnings per share growth. So jumping to pillar 1, we can see that from 2020 the EPS increased from $3.52 to $6.81 in 2024, accounting for a 5-year CAGR or compounded annual growth rate of 14.57%. So jumping back to the Grams formula, I think it is quite fair if we plug in the high EPS growth at 18%. With medium, for medium I will go with 15% and low I will go with 10%, and this will give me an average growth rate into the future of 14.33%. Now, when I combine this with the 5-year average EPS of $5.97 and all these other values, we will get an intrinsic value of $158.66, which is actually 31% lower than the current trading price of $230. But we still have 2 more valuation models to go through. So moving to the discounted cash flow model, we will calculate the intrinsic value based on the future free cash flow of the company. Now, first we have to predict the 10-year plus future free cash flow growth. We can see that the 5-year CAGR is sitting at 7.37%, with the free cash flow increasing from 1.7 billion in 2020 to 2.1 billion in 2024. Now, I think that predicting a high free cash flow CAGR into the future of 9% is quite fair, a medium of 7% and a low of 5%, which will give us a predicted 10-year plus free cash flow CAGR of 7%. Now, I will use this to calculate the future free cash flow, but then I have to discount it to the present value. And I will do that by plugging in the high discount rate at 8%, medium at 7%, and low at 4%, and get an average discount rate of 6.33%. If you don't know what discount rate is, it is essentially the minimum rate of return yearly I want from an investment into waste management. And as you can see, when predicting a discount rate of 6.33% and a free cash flow CAGR of 7%, we will get an intrinsic value of $119.89, which is again lower than the current trading price of $230 a share. Now moving to the final valuation model, the dividend discount model, I will predict the high dividend year-over-year growth into the future at 6%, medium at 5%, and low at 4%, which will give us an average of 5%. And when we combine this with the discount rate of 6.33%, we will get an intrinsic value of $260, which is a bit higher than the current trading price. So finally, moving to the ultimate valuation and averaging out the 3 valuation models we just did, we will get an intrinsic value of $180.62, which is actually 21% lower than the current trading price. And with a margin of safety of 10%, we would get an acceptable buy price at $162.56. So as you can see, even with an earnings beat, when we account for the company's future growth, they are currently trading overvalued. Now, I'm not saying that they are a bad business. I'm just saying that if you want to buy into the company, you might want to wait for their stock price to drop a little lower. But if you are holding the company, I would personally advise you to keep holding as they are expected to grow. With that, I hope that you enjoyed the video. Make sure to leave a like and subscribe as it really helps me out.